Okay, so what kind of situation do we have at the moment from an AUD USD point of view? Now, on the weekly time frame, what we can clearly see for this pair, we can see that the market has created this W formation, and after a W formation, what do you expect? You expect the market to create a rejection to the downside. Now, specifically, what we can see is that this W formation is completing exactly at this strong supply area for AUD USD. In fact, we can see that this green candle created a supply area that the market is currently respecting as resistance and basically being rejected from. Now, if we go and see what is the situation on the daily time frame, we can see that on the daily the market failed to basically continue higher after creating this minor W formation. Obviously, we want to see the completion to the neckline, and now it seems like the market is actually managing to break below this area. However, don't basically try to predict what the market will do. Always be reactive. At the moment, this area is still acting as support. Until this area will break to the upside, the market can easily continue to the upside. So we can't be looking for shorts on this pair yet. Now let's go and see what we have from a COT perspective. So what hedge funds at the moment are doing on AUD USD. Now specifically, if you check the COT data for the AUD, what you will actually be checking is AUD USD. Why? Because on the spot, all currencies are traded against the USD. Therefore, if you check the data for the AUD, you're actually checking AUD USD. And what we can see is that with last report, they have added a new 2.1k short positions, bringing net positions even lower, basically to a 35 minus 35k rating. Now, if we check, we obviously see that we have minus 59k shorts and 23k longs with a 45.8% short exposure and 18.3% long exposure. So clearly, hedge funds are more positioned to the short side than to the long side. And we can definitely be looking for possible continuation to the downside if the market will react to this. So if we will actually see the market break this structure to the downside, then what will happen? What will happen is that from a daily perspective, we will have an information. Now, after an information, what do you expect? You expect the market to make a move to the upside. So first, if the market will melt to the downside here, what we will be doing with students, we will be monitoring price action inside of this area on the 4-hour time frame, waiting for the market to provide to us one of our valid entries, because here we will have clear support, completion of the information, and we want to see the market make a move to the upside. So first, monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking a nice long with a good risk to reward and good probabilities for a nice move to the upside. And then again, we will be monitoring price action inside of this area, waiting on the 4-hour time frame for the market to provide to us one of our valid entries for another move to the downside. And basically at this point, completion of this impulse, correction, and impulse pattern to the downside with previous support, turn resistance at this area, and basically the confluence of the Fibonacci levels taken from the high to the low of the newly formed impulse. But very important to say, marking up this doesn't mean that this is the prediction. If the market will manage to break to the downside, then we will be first looking for a long and then looking for a short. But if from here the market will just explode to the upside, obviously we are not interested in the position. We first need to see the market break below this area before we can even start looking for potential opportunities. Now, if you enjoyed this free analysis and education, make sure to drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.